Hello class, welcome. Today we're going to be going over mortgage acceleration clause. What is that? I don't even know what it looks like. I never read it before. I'm never going to get one. You know why? Because I'm not going to buy a house. Okay, I don't want to do that. I look at hundreds of forms, okay, and I'm like, mortgage, 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 mortgage. 2,000, 3,000, 1,000, 1,500, 4,000, 6% amortized, 4% amortized, 3.5% amortized, which basically means times two, whatever the mortgage balance is. I'm just like, no, I can't do it. I can't. I know. So, this is, none of this is for my gain. Trust me. I have no desire to learn how to pay off a mortgage, learn how to pay off a car, learn how to pay off student loans, learn how to pay off any debts. I got no desire for it. You know why? Because I'm never going to acquire it. It's not me. I don't want it. Right? But you're my client. You're my subscriber. You're my parents. So I have to acquire this information very fast at a young age so that I can relay it back to you, share it back to you so that you can apply it and get you to that next stage, because a lot of kingdoms are being lost. Okay? We're going to go over that right now. Look, so the mortgage acceleration clause basically is something you signed, letting the lender know that at any time they can require full payment of your mortgage. Full payment. Boom. Within like 60 days or even sooner, right? Meaning immediately, at any time. Bank can just say, listen, you got to pay us back that whole entire mortgage today. And you signed it, not me, okay? Now, there are some ways, obviously, to avoid that ever happening, that ever occurring. And there's some very obvious things like, don't miss a payment, okay? Don't lose your job, okay? Don't let 2008 happen again. Um, manage your finances right, save money, okay? Have cash flow. There's some simple ways, but we're Americans, okay? We like to, YOLO, right? You only live once type of life. I get it. So in the meantime, look, just don't miss a payment. Even missing one payment, you can have this clause go into effect, which is crazy. Some other ways that can trigger this mortgage acceleration clause is by not paying your property tax or not keeping up to date with your homeowner's insurance, not keeping the house at livable conditions. I was like, I guess those are for the hoarders out there in the world, right? Not having the home as a livable environment can cause the mortgage to be accelerated. You know why? Because at the end of the day, that home ain't yours until it's paid off. It ain't yours. It's the bank's. So the bank's interest is not in you. It's the home. It's the property, right? So if you're not taking care of the bank's home until you pay off them, they'll take it right from you, right? Another thing is if you try to transfer property ownership without approval from the lender. Now that's a little tricky because for people that get divorces, okay, you can have some issue there, right? But those are some things to be aware of, all right? And I want to kind of go over some new things with you. I've got some new news for you, okay? So we understand, look, mortgage acceleration clause. For all my clients, for all my people that filled out forms, listen, you need to read your mortgage statement. You need to understand it fully. Let's educate ourselves, okay? All right, I'm taking a lot of time to try and learn this stuff so I can become of more value to you as we move along in this channel as it grows and grows and grows and helps us, reach more people. I need your help educating yourself on the different components of your mortgage, okay? Now, this is a problem, right? And most people think it's not, but look how many foreclosures there have been in the first 6 months of 2018, right? Now that number is fairly low compared to the previous years, and especially compared to, 08, 07, right? Now, what's interesting is this number is really close to the number back in 05, 06, right? Which is an indication that we are so close that if we're not careful, if we don't prepare ourselves properly, we can be in that same trap again in 07 and 08. It can happen all over again. And to avoid that, we need to educate ourselves. We need to make sure that we're not losing our kingdom. Okay, look how many kingdoms are being lost right here. We need to restore some kingdoms. Restoration, right? We need to restore some kingdoms, man. This is ridiculous. It's my desire to establish your kingdom here on earth. It's a desire of mine. As I establish my own in this household for my family, right? With the help of the King of Kings, okay? With the help of the King, we can establish our domain, our territory here on earth, and influence and impact the world so that they may understand that they are a king. There's a king inside of you to avoid your home being foreclosed, to avoid becoming a slave to the lender, okay? Want to avoid those things. So there's a couple of things that I came across that I also like to educate you on. Now, I've spoken a little bit about it. I'm pretty big on getting a personal line of credit, right, to start doing velocity banking. Okay, that's what we talk about a lot on this channel, is velocity banking. What it is, how to do it, how to increase cash flow, how to pay off all this debt in a very short period of time. Okay? Now, there are some other ways that are just as effective to pay off a mortgage in 5 to 7 years, to pay off student loans, cars, what have you. Okay? So some options are to completely replace your mortgage with a HELOC, a home equity line of credit. There's a way to do this, okay, even if you don't have a lot of equity in the home. It's possible. There's a channel called Replace Your Mortgage, and I've been looking them up, and I've been, talking to some clients. Actually, I've got one client that's a client of Replace Your Mortgage, and they were giving me their feedback with them, and I think they're valid. I think they have some good stuff. I'm actually going to have a call with them to get a little more information, because I believe in transparency and not competition. I believe in collaboration and impact. So if this channel and that channel, we can come together to improve your life, come on. That's the point here, right? Got to improve your life. So I think their whole mantra, their whole position is really their first goal is to get a first position HELOC. Okay, a first position HELOC basically is substituting your first mortgage, right? You can't have two firsts. It can only be one first, right? So by completely getting rid of your amortized mortgage for a completely brand new HELOC, okay, first position. Now, Now, my head's going to hurt me a second because I'm going to say the word refinance. Refinance, okay? I don't like that word, okay? It scares the heck out of me. But there are some cases where refinance does make sense mathematically. It does make sense. And they've proven it. Grant Cardone, my uncle, talks about it. So I gotta accept it. Okay, even though I don't like it. In most cases, refinance is terrible. You never want to refinance to try to lower your monthly payment or to try to save money. It's not going to work. It's going to blow up on you. But if we're talking about refinancing in the real estate investment world, number one, that'll make sense. I don't completely understand it. You can talk to my Uncle G. He does. Then there's the second proposition that I'm learning, which is replacing your entire mortgage, refinancing your mortgage for a brand new home equity line of credit. Now, this is interesting. It has to meet my requirements, or else I'm not going to do it. Okay? It has to meet my requirements. If it does, then it'd be the same concept. Velocity banking. Dump the income, take expenses out, keep cash flow in. Thing is paid off in 5 to 7 years. The thing is calculated simple interest, so automatically we beat amortization. Okay, cool. Now that is a strategy that I have not taught yet on this channel, but it is something that I'm considering to learn because I think it's important to continue to learn and expand knowledge and information and to not be ignorant, right, or stubborn, right? Even though I'm from New York, so I still have that little stubbornness, right? But hey, math is math, my friend. Listen, there's the one that I'm all about is getting a home equity line of credit in the second position, or you still have the mortgage and you've got a second position HELOC, which is going to be based off whatever value or equity you have in the home. Okay? Now, there might be some risk to some people on that. Yes, when not used properly. But if we're going to get a second position HELOC, meaning we still have the mortgage and now we've got a second lien on the first mortgage, which is the home equity line of credit. Now, again, if it meets my criteria, I did a video, okay, check it out. I did a video on the HELOC, right, for my requirements to make sure it's simple interest, check the draw period, repayment, make sure, I can have unlimited transactions in and out of the account. Okay, there's no crazy requirements, no closing costs, none of that crazy stuff, right? And then it could be a fixed interest rate. That's preferable. If it varies, it's fine. I'm not too crazy on that. But so with the second position, the idea is the same thing. If I have a, whether it's like a $20,000 HELOC or $50,000 or even as small as a $10,000, right? I've done some examples with that. I'm gonna take a chunk from the HELOC, to chunk at the mortgage, or to chunk at other debts first to increase cash flow, right? To speed it up, right? And as long as I make my payments, don't miss a payment, I shouldn't have to worry about the acceleration clause, right? As long as I pay my stuff on time and pay my taxes and I pay my home insurance, I should be okay, right? Then the third one is the one that I like most because I'm young and that's the only one I got. I don't have a HELOC yet. I don't got a mortgage. Like I said, I ain't gonna get one. So line of credit, that's a personal line of credit, PLOC, right? And that allows us to do the same exact thing. These things vary from as little as 1K, right, to as high as 50K, right? You can get as high as 50K. Not bad, right? Interest rates are very similar to the HELOC rates. Sometimes the HELOCs are smaller than the personal lines, but very similar. They're all simple interest, right? And they've got unlimited transactions. You only pay interest on what you owe, right? And it's calculated at a daily rate. So your costs are very minimal compared to the amortized debts, right? So to sum up this class, look at your mortgage acceleration clause, read it thoroughly, because what I want to be able to do for some people, right, when we're doing velocity banking, when we're trying to get our cash flow right, there's some interesting things that we can do, such as redirecting money, building your credit, acquiring your debt weapon. Here's one thing that's cool. It may not be for everyone, but you could essentially remove your escrow account from the mortgage, which would lower your mortgage payment, which would increase your cash flow for the year, which would keep more money in your debt weapon. And then by the end of the year, you just take a chunk out, pay the home insurance, pay the escrow, pay the fees, the PMI, HOAs, whether that's on a quarterly basis or semi-annual or annual, however it works. Again, I don't know, because I got no desire to get a freaking mortgage. No way, Jose. All right, but yeah, that'd be something to definitely look into if you have a home, and you read through the papers and see if you can see if your escrow was voluntarily put into place or a mandatory. Even if it's a mandatory, we can potentially get rid of it. It would be a request, and I think it's based off the equity in the home. I think that's how they do it. Last but not least, increase your cash flow so that we can master and apply the velocity banking method. Okay? So that we can accelerate our debt payoff on the mortgage company, on the mortgage lender themselves. They're not going to accelerate the mortgage on us. We're going to accelerate the mortgage on them. Okay? My name is Denzel. I hope you have a wonderful day. God bless. Enjoy. Subscribe. Like. Leave a comment below. Let me know your thoughts.